With the stock up nearly 1,300% year to date, a ton of investors are flooding into Genius stock right now, ticker symbol GNUS, in hopes that they can ride the wave up. This could potentially be a huge opportunity for massive gains, or could end up being a trap like many other speculative stocks in the past. But Genius isn't like most other pump and dump stocks out there. It's a company that didn't IPO recently. In fact, it's been around since 2009, but since it did go public, it's been on a slow and painful decline, down 98% off of its IPO highs. Now, I'm getting a ton of requests and questions on this stock. You guys want me to cover this. I know a ton of Robinhood investors, like yourself maybe, have been buying into this company recently for some potential quick gains. And you want to hear my insight on it, so that's exactly what I'll be doing in today's video. So guys, all I'd ask is that you hit the like button down below if you appreciate this, and also share this with a friend. I'm sure a bunch of your friends are also looking into this stock, so this may be a helpful video for them as well. So first, we're going to talk about what the company does, quickly look over their financials, and then at the end determine if this is a potential buying opportunity here for some massive gains, or if this is a trap that investors could fall into. So what does this company do? Genius Brands is a media company that is involved with developing, producing, marketing, and licensing branded children's entertainment properties and consumer products, which are then available and sold worldwide through media distribution and retail channels. So the company has their own IP, and they license it globally to make money off of it as well. Some of the brands you can see here that they own include Llama Llama, Rainbow Rangers, and other brands I've personally never heard of before. But just because I haven't heard of it doesn't mean it's a poor business. In fact, they seem to be seeing some success here with the book for Llama Llama, with over 30 million books in print globally across 60 countries. Other content they produce, like Rainbow Rangers, are broadcasted in video format and have seen success as well, which has resulted in partnerships with companies like Mattel for merchandise. Now, what surprised me is their distribution channels, and they have some extremely strong brands in place to throw their content on. These brands include Netflix, Apple TV, and popular children's channels like Nickelodeon Jr. So clearly, Genius has done a very good job here marketing themselves and establishing some good relationships with worldwide recognized brands. And because of this, it actually does make a bit of sense here to look more into this company for a potential investment, not just a speculative play. Now, apart from broadcasting their shows on partners' platforms, they also have their own network, which is the Genius Brand Network. This has the ability to reach 100 million US TV households, so the theoretical audience, if everyone tuned in, is massive. I also mentioned that they make money from the merchandise division as well, which has over 500 products available currently across 90 countries, and they have 450 more products coming in the next 12 months. They have a strong sell-through rate on these merchandise items, which is at 85%, and this gives them a reason to continue creating new merch that children want to get hold of. It's a good model here, I can't deny that. They create content that children get hooked onto, and then they create merchandise that these kids then go and ask their parents to buy for them. But guys, everything I discussed right now is stuff that's been around for a long time with this business. It's all old news, if you want to call it that. Nothing fundamentally has changed so far. So what's causing the stock to shoot to the moon quite literally here in the last few days? Well, after doing a bit of research on their IR website, Investor Relations, I found a piece of news which I think got investors excited here. The company launched a new channel called the Cartoon Channel, and they believe this is going to be, quote, a turning point in the life of the company. That's quite a bold statement, but what makes this such a big opportunity is the way that they are approaching this opportunity. Their new channel is what they call the Netflix for Kids, but ironically Netflix already has a kids section. But that aside, this new service will be absolutely free, which means there's absolutely no cost or subscription fee, and will be completely reliant on ads. They believe that they can attract a huge audience on all forms of media devices, like tablets and smartphones specifically, to get kids watching their content. Right now, because of the lockdowns, they feel like this is a once-in-a-lifetime opportunity to really gain a strong audience from kids because they have nothing better to do while they're stuck at home. They then go on to say that they bought out rights to 4,000 plus episodes of content for this channel, including Archie's Weird Mysteries to Minecraft, Journey to the End, and Gummy Bear and Friends. Now, some of you guys may recognize these names from your childhood, so these brands do hold some potential here. Now, the next part here in their press release is where the excitement comes in. You can tell by their tone in this paragraph that they are extremely optimistic here. They start off saying that Disney Channel, Nickelodeon, and Cartoon Network all started off small in the order of magnitude of 10 million subscribers or viewers. But then they go on to say that their new channel, scheduled for launch on June 15th, will be available to 100 million US households and, more importantly, 200 million mobile devices. They say if you have Amazon Prime, you can watch their content. If you have Apple TV, you can watch their content. If you have Comcast, Dish Network, Sling TV, you can also watch their content. The content will be there and will be launched across many platforms to as many viewers as possible. They also go on to say that this comes at a golden time for the company, like I said, as kids are stuck at home and parents want to keep them occupied with children's content. So I mean, I can see the excitement that they have here with this new launch. Unlike other media giants like Netflix, which again does have a kids content section, or Disney Plus, you don't have to pay anything to really access the content here from this new cartoon channel. I think it's pretty smart that they're going after this demographic here with just ads, because kids don't really care if they see ads or not. They can wait those extra 30 seconds to resume their content, and parents won't really mind showing them shows with ads on it, because that means they don't have to pay for the service directly. Now, I believe that their competition here with this new channel is going to be not these services like Disney Plus or Netflix. It's going to be other cartoon channels out there like Disney Channel, Nickelodeon, maybe Cartoon Network, all these other channels that consistently show children's content throughout the day. Now, are parents going to cancel their cable service so that they can show their kids this new cartoon channel? Unlikely. I think they're going to have both. Most parents don't really have a cable service just for their kids. They probably have it for other shows that they watch or sports. So I don't think canceling cable is really going to happen because of this new launch. And because of that, I think it's going to be very difficult for them to compete with existing channels that have a strong presence already. You got to ask yourself, is a child going to want to watch a Mickey Mouse show or one of these other shows on here like Rainbow Rangers or something? Most likely it's going to be Mickey Mouse because that's a brand that they recognize. They probably have some toys on there. Maybe they've been to Disneyland. So more often than not, in my opinion, brands like Disney will win out most of the time. Another popular trend now is YouTube. Children like to just go on YouTube and look for content creators that they enjoy watching, that appeal to them. And this is another metric that this brand is going to have to compete with because YouTube is absolutely free and kids can watch virtually unlimited amount of content as new content is created every single day. So Genius really has a bunch of competition here with the behemoths like, Google, Netflix, Disney. So in my opinion, it's going to be very difficult for them to steal viewers away from these existing brands and onto their new channel. Now, I want to be optimistic here, and I honestly do hope that they succeed because more competition is good for consumers. Maybe it'll cause these other services to actually lower their fees on the direct-to-consumer space. You never know what's going to happen, and I do wish Genius all the best here with this new channel. Anyways, looking briefly at the balance sheet here to see how the financials are doing, the current assets look good, which sit at around $10 million. Total assets sit at around $35 million, but the huge concern here is the $10 million that they have in goodwill charges. This is all probably due to the content and brands that they've created and bought over the years. And because this company is heavily reliant on the cartoon brands, they could hold some value here. But keep in mind, this essentially makes up almost 1/3 of their total assets and is completely intangible. Now, from their liabilities, I wanted to include the column on the far right because that's the quarter ending 2019. We can see some huge liabilities added to the balance sheet since the last quarter, and that is very concerning. They have $19 million in current liabilities, which is quite high considering that they have only $10 million of current assets. Most of these liabilities is contributed by the $14 million liability in the warranty derivative liability line item. They are not in the strong position currently to cover their obligations when comparing their current liabilities to the current assets. And on top of that, their total liabilities add up to $30 million. So this is just $4 million less than their assets. But when you look at that goodwill line again, this really concerns me. What's worse is that this company continues to struggle to grow revenue, but without fail, they seem to lose money every single year regardless of revenue performance. To keep up with this, they have consistently had to dilute shareholders to pull in more cash, and we can see how drastically the share count of the business has been growing over the years. It's gone from around 4 million in 2017 to almost 30 million in 2020. That's a 7.5 5 times increase in shares over the years, which has absolutely crushed any value that existing shareholders had in the business. Now, when I see shares increasing at such a rapid rate, it's typically a sign for me to stay far, far away from this business, because it shows me that shareholders are kind of put to the side here. They just keep diluting them, and that's how they keep the business going. What you want to see instead of this is share count decreasing year over year, because companies are buying back their shares, and that's actually increasing shareholder value. For example, we can see Apple here, and you can see year after year, they've been decreasing their shares by buying them back, so existing shareholders can actually see their shares increase in value in this situation. Genius has also consistently had negative free cash flow as well, so there's no end in sight to this money bleeding that the company is seeing, and it's really hurt investors like we saw. The stock is down 98% from its highs. In my opinion, this is a stock that's a pure example of a company that just struggles to survive, consistently burns cash, has no growth in their revenue, and just can't make money. And all of this is done in the process while shareholders get destroyed as well. Their new direct-to-consumer option, the new channel that they're launching, is yet to be proven, and it could be a huge hit for the company and could actually turn this business around to finally see some profitability. Of course, the question is, are we going to see growth like we did with Disney Plus, with millions upon millions of users adopting this platform? I don't know. We'll have to wait and see, but if I had to place a bet on it, I think that this may actually be somewhat of a flop here. However, if they do manage to execute well, I think this company could be seen as a potential takeover target. Companies like Turner, who own Cartoon Network, could be a potential buyer, or maybe AT&T, who owns Warner Media, could be a potential buyer, or maybe even Viacom CBS, who owns Nickelodeon, the Nickelodeon brand, could potentially be a buyer for this company as well. I think it's very unlikely that Disney is interested here with these brands, but one of the other players in this space may come in to buy this business if this new free platform that they launch actually takes off and becomes successful. Now guys, because the recent run-up the stock has seen, Genius has gone from a company with a $10 million market cap to well over a $200 million market cap as of recording this video. So of course you gotta ask the question, is their brand now worth this much of a premium because of this new direct consumer offering? Investors do seem to think so, but I am not too sure. They would have to generate a lot of value to make up for this huge run-up in their market cap. $200 million is a drop in the bucket though for these other media giants if they wanted to buy this company out. But from their perspective, it's very hard to justify paying this when the stock was literally at $10 million just a month ago. So as an investor, I think this is a very polarizing stock because you could really go either way. If you truly believe that this new channel that they're launching on the 15th of June will see a lot of success and you see a lot of users start using this channel, that could result in a huge opportunity for shareholders even at these current lofty valuations. However, on the flip side, if you think that this channel is gonna flop, this may actually be a prime shorting target or even a stock to buy puts on, because the stock could come crashing down much quicker than it went up, could essentially end up being a trap for investors, and a lot of money could be made on the downside here as well. Guys, as of right now, I'm not interested in this company. You guys already know I own Disney, and that's kind of my play in this space. But I do wish them all the best because more competition is good for consumers, and it will speed up innovation in my opinion. Guys, let me know in the comment section down below what your thoughts are, whether you're buying this stock, short term, long term. What is your bullish thesis on this company, and where do you see this stock moving in the next, say, couple weeks, months, or years? Love to hear your thoughts in the comment section down below, guys. But either way, don't forget to invest positively, and I'll see you in the next one. Peace.